With gold nearing an all-time high, I thought it was only right to jump into a gold-focused mining firm. This one I've picked out today is Centamin. Actually was mentioned in a discussion with me and a subscriber to the channel, and I'm sure they know who they are. Now, I do want to point out that they were a very interesting company to look into, and I'm glad I can share the experience with you. So, let's jump right into it. Ticker symbol is CEY. Traded on the London Stock Exchange, they are part of the FTSE 250 index. Now, Centamin have been a little pummeled over the last 2 years. From trading at almost of a height of £2.13, they are now down to almost 86 pence. To put that into perspective, that's, well, in the last 5 years, that's almost the lowest they've been. Could that be an opportunity? That is what we're going to have a look into. Now, dividend yield sits at between 7 and 8%, depending on the website that you look at. We'll look a wee bit further into that later in the video. Let's go. Okay, so Centamin, first things first, straight to their website. Best place to start with any company. We strive to responsibly operate multiple low-cost, long-life mines, returning tangible value to society and shareholders. 4.7 mega ounces and 12 mega ounces of group resource. Nice. Owning almost 6,754 squared kilometres. Where do they operate? Now, this is a wee map of Africa here. Burkina Faso and the Côte d'Ivoire. I'm probably butchering that, but down here in the left corner, they have 3 projects. Now, these projects are not currently operating mines. The only operating mine that they have at the moment is the Sakari gold mine, just located south of Cairo in Egypt, where they've also office locations. So it's an interesting one. The mine that is operating, working away, Sakari in Egypt, is working well, and then there's some projects in the pipeline. Now, why has their stock price taken a bit of a beating? Well, it's due to a multiple of reasons. What you do need to know is that gold is near an all-time high, and there is a very important date for this stock, which made me think, in a sense, I probably should have waited. But I'll show you here. Investor calendar, 20th of October is their Q3 report. They are on course to be mining more this year than they did last year, and with gold prices the way they are, that is going to be a fantastic thing if they do it. There is a few other things in mind on the pipeline, but the 20th of October is definitely a date that I'll be writing in my calendar because I want to see how they perform. Going to the About Us, we can see a wee bit about them. Our aim is to position Centamin for the future through disciplined investment in growth and diversity. In the background, you can see, I think that probably is the Sakari gold mine. We can go down here. Their principal asset is that gold mine. It's a long life, bulk tonnage, open pit and underground operation. Began production in 2009. It is the first large-scale modern gold mine in Egypt. It's also one of the world's largest producing mines, forecast to produce in excess of 400,000 ounces per annum in a 12-year life of the mine, or with a 12-year life of the mine. The company's got a solid financial position. We'll see that later on in Simply Wall Street. Very, very healthy balance sheet. Strong cash flows, development and operating experience provide us with significant advantage over other gold projects. Nice. You can go into purpose and values, business model, strategy, leadership, governance, latest reports, and then all the investor sections. You can go as deep as you want into this company. I will click onto their business model because I do like to just have a wee scoot through it. Obviously, they are in Egypt for the next 3 decades, they reckon. That mine will be operating. And they are also looking into Burkina Faso and Côte d'Ivoire. That tells me that they're already looking down the line as to where their next mines will open up, and that is a great thing. Let's go over to. This was one of their. This was their interim report for the end of June 2022. What I wanted to show you here was their outlook. Was 430,000 to 460,000 ounces for the year. Again, all this leads up to whether they actually do it. So 20th of October, third quarter, results, best thing to see. Now, let's jump over to Dividend Watch. I use this for my portfolio. A lot of you will recognize it from the portfolio videos. Great wee tool just to see a wee bit of information about Centamin here. Total liabilities, cash flow, net income. As you can see, over the years, they have had their ups. They had an amazing 2019, less so in 2020, and 2021 isn't actually listed there as of yet. We can go over to their dividends, and we can see that their dividends, they've been up, they've been down. It is all based on the commodity and how much they actually mine in that given year, alongside other factors, but you get that with mining firms from Rio Tinto to BHP and all. When it all comes down to if they have a fantastic year, the dividends roll in. No, they don't roll in, they pour in, literally. But if commodity prices collapse, it's not a great year for such firms. But Centamin could potentially be a bit of a diamond in the rough, so to speak. But over on to Simply Wall Street, another free resource that I use. You can check out 3 companies a month in this one. If I get an affiliate link for Simply Wall Street, I will certainly have it in the description below. Be sure to check it out. But you can use it for free. 3 companies a month. Their wee snowflake analysis is quite good. It covers the value of a company, goes over to the future performance in the next couple of years, their past, their financial health, so their balance sheet, and then their dividend. Now, one thing about most mining firms is their balance sheet tends to be extremely strong compared to other companies. And the analysis here, it's flawless balance sheet and fair value. It's currently trading 64% below its estimated fair value. Now, that is different. There is the fair values based on a discounted cash flow model, which is essentially a way to, calculate this is what the company is fairly valued at. You can use intrinsic value as well. That is another way of looking at it. We'll use alpha spread for that. But let's go down here to valuation. Pay ratio is currently 8.7, so 126 million earnings for a market cap of almost $1 billion. Against the likes of Polymetal, which is another gold mining firm that I'll be doing on the channel soon, it is 6.6, so it's a bit above it and close to Hochschild Mining. Industry average peer average is about 11.9, and then there's Pan African Resource down at 4.8. Okay, so yeah, this is the discounted cash flow model where essentially it's saying it should be worth about £2.41. Now, what I love to look at is, was it ever worth £2.41? And at its height, it was worth £2. So this company has certainly been at the £2 mark before. That, again, is another encouraging sign. But it all depends on how their Q3 earnings come in and how well they are performing this year. Hopefully the company does quite well. Future growth is actually at a minus 14%. Gold prices are at an all-time high. They can potentially start to go down. I'm sure that's factored in. And as you can see, their free cash flow, a lot of things are supposedly going to decline into the future. As for past performance, they were growing 6.9% over the last few years. And you can see their free cash flow was also growing up till December 2020. They've had a decline in their free cash flow. However, that's, it's kind of based on, again, a few factors, the pandemic being one as well. Financial health, this company scores 6 out of 6. Its short-term assets to liabilities are perfect, even cover the long-term liabilities, which they don't actually have that much. They're also completely debt-free, which again, a company that is debt-free cannot go bankrupt. A very popular Peter Lynch saying there. Dividend 7.86%. So you've seen it says somewhere, it's low 7%, almost 8%, but 7.86%, pretty good yield. Industry average actually sits at 9.9. So it's above the top 25% of the market, but it's just below the industry average. But sometimes mining companies, I'm sure you all are very aware, its yields can explode depending on how well the company's doing. But yeah, their cash payout is a little, that is massive at the moment, but I think it'll be resolved towards the end of the year. Let's see, who owns this company? I want to see ownership. A lot of insider ban recently, in the last 12 months. That's always encouraging. When you see a lot of insider sell off, that's alarm bells most of the time. But people buying shares clearly means a lot of usually their board members, they should be quite, directors or on the board. When they're buying in, they must be pretty confident in the company that they are running. Institutionally here, we can see that 10% is owned by the Van Eyck Association, then BlackRock and Schroeder. Then Vanguard also in the mix. Okay, jumping over to Dividend Max, I want to use this as another wee resource here. As you can see, if you were to have 100 shares, which would be £80 sterling, you got a payout of £2.18 on October there. Their next payout is actually April of next year. They only pay twice a year. And the ex-dividend date, April of 17th of April 2023, which means you'd need the share on the 16th of April in order to be entitled to the dividend. And the declaration date for that one is the 20th of February. As you can see from their annual dividend chart, some great years, some mediocre years, but mining firms, I have to say, definitely one of the top, definitely up there with the likes of, house builders for massive dividend payouts. Maybe not super consistent growth-wise, but massive to say the least. Jumping over here to Trading 212, this is the platform that I personally use for my portfolio videos. Definitely check it out if you're needing a brokerage that doesn't have any fee. Well, it doesn't have any real major fees. One of the best things that I like about them. Centamin here it gives you a bit of information on the company, gives you a breakdown, then it goes down into employees of 2,500, basic materials, and their industry is gold and silver, but of course their primary one is gold. Market cap of $1 billion, pay ratio, revenues, and we can see some of the charts. I do like the charts here. Revenue, their profit margin sits between sort of 10% upwards of 20%. Depending on, again, gold commodity prices and how much they mine in that given year. In terms of cash flow, they are spending an awful lot in investing, which is fantastic to see. A lot of that is involved in their projects that they're having a look into for perhaps new mines into the future. And they paid out $80 million in total dividends in 2021. Nice to see. The massive dividend or massive cash flow businesses, mining, it has to be said. But you can see the height that they were sitting at, and then they sort of came down with a bit of a tumble. And now at 83 pence. But let me know, is this part of your portfolio? Is it something you'd be looking into? Of course, none of this is financial advice, but I do like to hear your thoughts on such stocks. So let me know in the comment section below. If there's any suggestions, also throw them in. I'm going to be ramping up the videos in the coming weeks and hopefully get quite a few out. So I'll see you all in the next one. Thank you. Oh, one last wee thing before I go out. Forgot to mention.